The global investment landscape is undergoing a significant transformation. After years of extraordinary gains driven by technology stocks, low interest rates, and abundant liquidity, many of the world's wealthiest investors are quietly adjusting their portfolios rather than concentrating solely on high growth assets. They are increasingly diversify across infrastructures, private markets, artificial intelligence, commodities, and alternative investments. This shift is drawing attention because institutional investors, family officers, sovereign wealth funds, and billionaire entrepreneurs often influence long term market trends, while individual investors frequently focus on daily stocks market movements. Large investors typically make decisions based on economic conditions that may shape markets for years or even decades. One of the biggest reasons behind this change is involving interest rate environment. During the previous decade, extremely low borrowing costs encouraged investors to pursue high risk assets in search of stronger returns. Technology companies, venture capital, and speculative investments attract enormous amounts of capital. Today, higher interest rates have fundamentally changed investment decisions. Safe assets such as government bonds now offer meaningful returns, while borrowing has become more expensive for companies and consumers alike. As a result, investors are placing greater emphasis on quality, profitability, and financial resilience. Um, Artificial intelligence remains one of the most attractive investment themes, but the focus is becoming more selective. Rather than investing in every company associated with AI, institutional investors are increasingly looking for business with sustainable competitive advantages, strong balance sheets, and clear paths to long-term earning growth. Infrastructure has emerged as another major destination for global capital. Data centers, renewable energy projects, electricity transmission networks, ports, airports, and digital communication systems are attracting billions of dollars in investments. These assets often generate predictable cash flows while benefiting from long term economic trends. The AI revolution itself is accelerating infrastructure demand. Massive data centers require electricity, advanced networking equipment, cooling systems, and specialized semiconductor manufacturing. Investors increasingly view these supporting industries as essential components of the future technology growth. Private markets are also expanding rapidly. Many of the world's fastest growing companies now remain privately owned for longer periods before entering public stock markets. As a result, wealthy investors are increasing allocations to private equity and venture capital funds to gain earlier access to innovative business. Real estate strategies are changing as well. Traditional offices' properties have faced challenges following changes in work patterns, while logistics facilities, warehouses, industrial properties, and data centers real estate have become increasingly attractive. Investors are adapting portfolios to reflect shifting economic activities. Energy investments has become more complex. The transition toward cleaner energy sources is creating opportunities in solar, wind, battery storage, and electrical infrastructure. At the same time, many investors continue supporting conventional energy companies that generate strong cash flow and remain critical to global supply. Critical minerals has become one of the fastest growing investments. Seams, copper, lithium, nickel, rare elements, and other essential materials are required for electric vehicles, renewable energy systems, advanced electronics, and AI infrastructure. As demand grows, investors are directly capital toward mining companies and resources developing projects. Um, Cybersecurity has become an increasingly important investment area as businesses become more dependent on digital infrastructure. and artificial intelligence protecting information systems has become essential. Demand for cybersecurity solutions continues expanding growth across governments, corporations, and financial institutions. Another notable trend is growing emphasis on cash flow rather than rapid expansion alone. Investors are rewarding companies capable of generating consistent earnings, maintaining healthy balance sheets, and producing reliable free cash flow. Profitability has become more important than aggressive revenue growth in many sectors. Divided playing companies are benefiting from this shift as well. Businesses with long records of returning capital to shareholders through dividends and share buybacks are attracting renewed interest from investors seeking stability. Risk management, risk management has also become more sophisticated. Geopolitical tensions, supply chain disruptions, inflation risks, and economic uncertainty have encouraged investors to build more resilient portfolios. Diversification across assets classes has become increasingly valuable. Technology remains central to global investment strategies, but the approach has matured. Investors are no longer focused exclusively on customer technology. Instead, they're exploring enterprise software, cloud computing, semiconductor manufacturing, robotics, industrial automation, and AI infrastructure. Family offices with manage wealth for many of the world's richest individuals are playing an increasingly influential role. Unlike many traditional investment funds, family offices often have longer investment horizon and greater flexibility, allowing them to pursue opportunities that may require years to mature. Sovereign wealth funds are also reshaping financial markets. These government owned investment funds collectively manage trillions of dollars and increasingly invest across infrastructure, technology, healthcare, renewable energy, and private markets. Their decision can influence industries worldwide. Financial innovation continues creating new opportunities. Tokenized asset, digital financial infrastructure, and advanced trading technologies are changing how capital is raised and invested. Also, adoption remains gradual. Many institutional investors are monitoring these developments closely. Economic resilience has become one of the defining characteristics investors seek. Business capable of adapting to changing market conditions, technological distribution, and geopolitical uncertainty often receive premium valuations. Analytics believe demographic changes will continue influencing investment decisions. Aging population in development economies, combined with growing middle classes in emerging markets and creating structural shifts in demand across industries, including healthcare, financial services, housing, and consumer products. Despite ongoing optimism surrounding innovation, investors remain cautious. Economic growth has moderated in several regions. Government debt remains elevated, and inflation risks are not disappeared entirely. These factors encourage balanced investment strategies rather than concentrated bets. Looking ahead, many experts believe that the next decade will reward diversification more than concentration. Instead of relying on a single sector or investment theme, successful portfolios may combine technology, infrastructure, healthcare, energy, real assets, and international exposure. The changing strategies of the world's largest investors offer valuable insight into broader economic trends. Capital is flowing towards industries expected to benefit from long term structural changes rather than short term market excitement. Artificial intelligence, energy infrastructure, digital information, healthcare innovation, and emerging market growth are increasingly viewed as interconnected themes rather than isolated opportunities. Today, together, they represent the foundation of the next generation global investment. The global wealth shift is reflects more than changing market preferences. It represents a new way of thinking about risk, resilience, and long term opportunities. Investors are preparing for a world shaped by technological innovation, geopolitical change, demographic evolution, and economic transformation. As trillions of dollars continue moving into the new sectors and regions, the financial landscape is evolving before our eyes. The investment decisions being made today by the world's largest institutions may determine which industries, companies, and economics become tomorrow's biggest winners.